Good morning, everybody. It's Wednesday, July 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3 3/4 at 412.5. November soybeans were up 4 1/4 at 1047.5. And December Chicago wheat was up 7.5 at 563. Good morning, guys. Nothing really in the way of fresh news here this morning. We continue to monitor the RNC for different discussions and potential policy movements as we go forward with the potential for a new administration there. But outside of that, nice to see some green on the board this morning. We've kind of held the lows in D's corn, which is good. It's positive. And, Ben, maybe a couple thoughts on your side of the desk, and we'll throw it around the room here this morning.
Yeah, last Friday we had what classical bar charters would refer to as a key reversal. That was a new low for the move. An outside day, meaning we extended on the downside below the previous day and above the upside from the previous day, and had a strong close. And we came in over the weekend. We had good rains. Maybe a little stronger perception that Donald Trump was going to win the presidential election. We back and filled all of that, but we didn't negate it. I think Dustin did a tremendous job yesterday of framing how short and relative terms to the size of our crop the managed money is. And they've taken on a trade that has to get them to fall in order to be paid. We see this kind of in spreads that aren't suggesting that this is maybe the place where you want to pile into a short. They're not inverted, but they're certainly not extended to the degree that you would think with some of the numbers we've seen. So, maybe they're carrying a little bit of risk around, a little bit bigger risk that they didn't think of as we see the dollar starting to weaken. Potentially a flight to quality, and when we say that, there's a number of different ways to look at it. But typically it would be instruments that have less risk. So I do think that you have possibility of maybe seeing some things move around prior to us getting to harvest. And we certainly have a big risk point in August when we start to see some of the FSA data. I don't think that you're going to see a big supply reduction from yield. I think we have a pretty good crop out there, but we could upset the balance sheets a little bit with some acreage changes. So, everyone has got to trade in margin every day. Managed money is no different. If they start feeling some heat, which at this point, they don't really have heat. 10 cents for them is nothing. Maybe there is just some risk off mentality. We would think in terms of flight to quality. I think one of the most simple analogies is, your things that you can drop on your foot that are physical. And maybe the crude oil market of the COVID years negates that, but I think it's still a relative topic as the currencies start to move. How does managed money want to be placed? And they have some risk here, over the next 4 to 6 weeks if things were to turn poor. We have a saying in bull markets, you got to feed a bull every day, but the bear has just stood here and been fed consistently now for going on, 4 or 5 weeks. So, maybe some of that subsides a little bit. We can see a short covering bounce, at least test some moving averages up above, and give people a little bit of an opportunity. I think that Dustin's mentioned before, the worst place to be is between 390 and 410. So we'll see how it plays out. I don't think they're going to get nervous just yet, but a little bit of a short covering bounce with the decline we've had, a little back and fill would not be out of the ordinary under any circumstances.
And Dustin, just a couple of thoughts. It was interesting to see the S&P yesterday for the 38th time set a new all-time high. So outside markets continue to rip. Excuse me. We've got the 10-year dropped down to 4.16 yesterday. So, you hate to talk in terms of certainties, but the market is literally pricing in almost 100% chance of the Fed cutting rates in September, and just maybe a few thoughts there as you look at the outsides.
Yeah, I think the big thing with that is, Is this a pre-Volcker cut too soon situation, or is the disinflation real and the the cut is warranted? There are definitely arguments on both sides of that, and the risk is if they cut too soon and the inflation is still not solved yet. We're going back to another major loss of purchasing power of the U.S. dollar. So I think in the long run, we definitely have to take into account that we haven't had this type of inflation for a long time. So your baseline value of hard assets like farmland and gold, we continue to see strength in both of those sectors. Gold's hit new all-time highs at the same time. And if we're losing purchasing power of all fiat currencies and the dollar is just, actually looks fairly strong relative to history because it's just the best house on a bad block right now. But you go look at the hard assets that you can buy with said dollar, gold, farmland, housing. It still is a factor that we are in a new ball game for where baseline corn values and bean values could end up going, in my opinion, right? If we're going to go out and say that, corn needs to go down and revert to mean back in the 3s and 4s, I don't think trendline yield at those prices justifies where farmland values are. So one of the two is going to be off if we continue in this course over the next 3-4 years. Right? We can't have $3 to $4 corn and have $22,000 land values in Illinois for a 5-year stretch. So I think that's something to note. If buyers and sellers are also having a hard time matching up right now, even though we have all this excess supply, we're still seeing some spread narrowing and basis tightening. So, and that's corresponding with a record short fund position. So if you have paper being just shoved into the ground, holding a beach ball underwater, and the cash market saying, hey, we really want this physical, we can make money crushing corn at this point, is that sustainable? Now, it might be that funds have an orderly transfer of that position into a record harvest. That's a very good possibility. I still go back to the point you just made about the dollar index, though, and say, okay, well, this is a short leg of many more positions, more than likely for that sector, managed money sector, and any sort of catalyst that gets them out, or buyers are still end up. Really, the fundamentals come in and take over at the end of the day, I guess is my point to the long argument. So I wouldn't be surprised, even if we had a 181 or 182 national yield, to still settle somewhere in the mid 4s. I wouldn't be surprised to be, high 3s either for 184, 185. A lot of year left to figure out where we end up. I mean, there's a big difference in price action. Whether you're at a 177 record yield or a 184 record yield. So we have to just kind of see where we end up at the end of the year.
Yeah, that's good stuff. A couple of minutes here coming into the open, Ryland. I know we got cattle on feed out this Friday. We were supposed to get the July cattle report, but that's yet to be released.
Right.
Couple thoughts here on livestock.
Yeah, I mean, cattle's just chopping. It seems like the fundamentals are starting to kind of catch up to where the futures want us to be. So, it's just been kind of back and forth kind of trade, really in narrow ranges, all things considered. So, with the report kind of looming, usually you see a little bit of some liquidation or some kind of repositioning just to kind of ease some of the blow if you get a big reaction to it. But right now, the market's looking for on-feed inventory July 1. 101, so it'd be up 1%. Placements down 3. It's been a pretty wide range of placements. I mean, there are a lot of times, but the low side of the estimate's down 10%. So I mean, I think something to be cognizant of. Just that's a number that's possibly printable, and I think the market would be a little bit shocked by that, to be honest. But we'll see. It's always kind of a wide guess, and how we kind of fared as far as imports go will be part of that. So marketings are expected to be down about 8%. So once again, it's just going to be that kind of trade. I think everybody's kind of being cautious here because you got the big discount on the board. You got cash trade that hasn't really taken place yet, but the expectation here is for lower, steady to lower from the previous week. We are seeing new lows in beef prices. Choice got down to was down 223 yesterday, and open interest was up about 2,700 contracts. So, just kind of limping along. Just waiting to see the data to really formulate a new opinion here. But on the hog side of the market, we've kind of bounced off the lows here. We've had kind of straight up kind of trade. We're like $7 off the lows. We're starting to see this kind of near term pickup in cash. So overall, we were really hoping to see a big amount of short covering on last night's daily bulletin, but did not show up. Open interest actually increased 570 contracts. So, maybe there is some, funds buying it rather than just outright liquidating, just trying to weather this storm. If it is a little bit of a near term kind of uptick in cash and cutout, but we'll see. Cutout was also up $2. We're back up over 100 for the carcass. So, we'll see if that trend continues here, but we are running into some pretty heavy areas of resistance. We almost hit the 40-day moving average, which, is kind of that level that we've always kind of used just to measure what the funds were going to do next. So we'll see if they actually take that out today, but it's been kind of a nice bounce. That's for sure. I mean, from an opportunistic standpoint, maybe looking to get a little bit of coverage now that we're actually on a bounce rather than just collapsing. But it does look like the hog market's trying to stabilize a little bit. You factor in a lot of pretty negative supply news here. So we'll see what comes of today, hoping to see some more follow through, but we just need to see some follow through and cutout as well.
Very good. And some exciting news. I know that the livestock portal has now been released in AgYield. And so we are able to integrate livestock within our program that we use on the grain side. So we're very excited about that too, Ron. I know maybe just a couple of thoughts as you had a hand in helping put that together.
Sure. Yeah. I mean, it's very early in the rollout. So we're going to be kind of testing it this week, but yeah, really excited to kind of get that going. It's a good way to just kind of measure your whole kind of profitability and just see where everything's at, integrating your hedges. It's going to be a big deal. You can also throw your insurance policies in there as well. So it's going to be a good way just to track everything. We're going to start getting accounts permissions to start to add this onto their account and have just, start going through them, I think today. So I think calls are going out, just getting guys roped in, want to see the software and really excited that it's finally coming to fruition.
Awesome. Yeah. And if anybody wants to learn more about that or even what we do on the grain side as well, please don't hesitate to give us a call or reach out. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments there today, guys. It was a good conversation. We've got export sales out tomorrow morning, 7:30 Central. So we'll take a look at that, discuss it in the war room. I hope everybody has a great day today, and we look forward to talking to you again tomorrow.
Thanks, Dan.